Right now, the 10-year Swiss bond yield is negative. It's the only 10-year bond in Europe that is negative. And what does this mean? This means that literally you are paying the Swiss government to let you lend to them for 10 years. So if you're a company, why wouldn't you go there? I mean, just to contrast this, in the U.S., 10-year bond yields are about 2%.
Which is still nothing, but not quite as good as it is in Switzerland, I guess.
Right. And so and you're starting to see in Europe, there's about an estimated globally, there's about $4 trillion of sovereign debt with negative yields, right? In Europe, Switzerland is sort of the epicenter of this, right? And you're seeing that corporate debt yields are starting to head toward negative territory themselves. So as you said, this makes perfect sense, except what is Apple going to do with more cash?
Before we get to that, let me ask you, any sense of where this is going to trade, at what kind of yield?
Well, right now, I just looked up their 30-year bond yields from earlier. I think this year it was like a little less than 4%, 3.7%. As far as the yield goes. I mean, I don't know what maturities they're going to be selling. Goldman Sachs and Credit Suisse are going to be managing.
It'll be very interesting to see that. But back to your point about what are they going to do with all this money? I mean, we've seen them do buybacks. We've seen them issue dividends. Are we going to see more of that?
Well, is it just basically, as we were talking about before air, I mean, is it just, raising money for financial engineering's sake to basically boost their share value?
Or do you go out and invest this in people and new infrastructure and, really start to build the company?
Or is this a big carry trade? I mean, essentially, right? I mean, if they're borrowing in Swiss francs and they're coming over here and investing in dollars, I mean...